Welcome to Kitco News. I'm Niels Christensen. The Federal Reserve's unprecedented monetary policy has been a major factor in the rally we've seen in the gold market. However, is this rally at risk with the Senate looking to not to fill two empty seats at the Federal Reserve? Here to talk about the nomination process and the risks potentially for gold is Peter Grosskopf, CEO of Sprott Inc. Peter, it's always a pleasure. Thank you very much for joining us today.
Good morning, Niels.
Um, so the Senate is looking to fill basically two Federal Reserve seats imminently. One of them's fairly controversial. Judy Shelton. Hard to get a read on where she stands, and I'm sort of wondering, does her nomination, if she's on the board, will that impact gold prices? The Federal Reserve has unleashed unprecedented monetary policy stimulus, and is that at risk?
I don't think so. From what we've seen from Ms. Shelton, her policies or what she's advocating for come in two flavors. The first is that she's a free market advocate. And I see a little bit of hypocrisy around the Trump administration's stances on that, in that they're pushing the Fed to lower rates. They've been consistent in saying the Fed's got too much power and they're keeping rates unnaturally high. She's saying the free market should set the rate and the rate should be lower. I'm not sure how that works together, because it's clear that the Fed has actually been sponsoring lower rates for some time. So, there's a lot of talk of lowering the interest rate around her policies. And maybe I'll stop there, and I can come back to the second point that I see anyway.
Well, just really quickly, she has been an advocate of the gold standard.
Yes,
Would
that's what I
that
was
be,
going to mention.
yeah, would that be a game changer for the gold market? I mean, and is that realistic? Does the U.S. economy, what are the chances of the U.S. economy going back to a gold standard?
So she's talking in a general sense around some kind of new currency that is partially backed by gold, and revisiting the Bretton Woods agreement, and starting something that would be an international in scope. I don't see how that could be negative for gold. It seems to me that if you had sovereigns starting to back their currency with any gold, there's a lot now that have none, such as Canada. I would think that would be a major positive for gold, not a negative.
Is a gold standard what's needed? I mean, we talk about in the last few months, everybody's talking about, currency debasement. And I mean, the government, the Federal Reserve, central banks around the world have just flooded money into financial markets. And, one of the ways people are saying that, the only way we can get out of this is currency debasement. So, I mean, is this, especially, post COVID, is a gold standard, do you think, going to gain momentum as we look at how we deal with currencies?
I see it as two separate questions. Debasement, yes, absolutely. They need it. The Fed's been talking about it. The US dollar is rolling over in response to the Fed's comments about a lower dollar being needed, and also economic growth being a lot more squiggly shaped than V. So, yes, debasement is on its way. And the second point would be, is this part of it? Look, I don't see how backing currencies in any measure with gold is going to be anything other than positive for gold. I think if anything, it would put a practical limit on the amount of debasement that could occur. So that's probably a good thing too, and it's especially a good thing for gold.
So last question on this, and I think it's important to note that, I mean, Shelton and the other, she's just one vote on the committee. So I'm sort of wondering, I mean, do you see any change in the trajectory of monetary policy. I mean, the last meeting they had, they signaled that rates were going to remain low for the next 2 years. People are expecting that to be even longer. Do you see sort of fresh blood on the Federal Reserve sort of changing this trajectory?
Well, you don't want to bet against the Fed. The Fed looks like it's getting more dovish. And I would say in the end, it doesn't matter that much anymore because the debt loads are just so high that nothing but low rates and nothing but modern monetary printing can suffice but to roll the situation over and kick it down the road. I just don't think the Fed has a very large playbook going forward.
Peter, thank you very much for those comments. It's going to be interesting to see how the Fed evolves from here post COVID.
Lots of money printing.